Hi, this is Charles Nenner, May 24th. It's time for a special podcast because the equity markets are so volatile. And I have been writing about the daily and weekly cycles, and maybe it's not totally clear how to combine them. We got three groups of people following our research. They're the long-time hedge funds and banks and institutions. They know what to do when the long-term cycle tops. They try to sell as much stocks as they can, and they know how to hedge the rest of the portfolios. Not totally, because most hedge funds and pension funds lost a lot of money. Then there are the intraday traders who are very knowledgeable, and they use the intraday signals for trading to go long and short. Most of the people who follow research are intermediate traders. And especially for those intermediate traders, I want to give another update on how to use cycles. And I also want to look at our track record. Now, this is a long-term Dow Jones chart. It's important to see, and what we wrote at the beginning of the year, that here the cycles that caused the downturn in 2007-8 look the same as in this case. Even more important, the sell-off, because what was supposed to be the virus problem showed up here, but actually not as deep as the others over here. Longer term investors who watch the cycles can use this. It's very simple for them to sell when cycles stop. When cycles bottom, they buy back. They had the problem over here. Here we went out already before the virus came in the markets. And now we're in a situation where these longer term cycles are really down and continue down. And as I mentioned before, the down move we have seen in the first 5 months of the year have only been seen in the 30s. So this is a pretty serious situation. Now, we're right at the point where I have been writing that daily cycles are bottoming, and investors should use bounces to lighten up if they didn't sell around this top over here, because weekly cycles are down. So let's take a look what I mean by that. In this chart, it's the same chart I drew by hand, so it's not exact what I mean by daily cycles. So the weekly cycles that topped by the end of last year came together on the top with the daily cycle. This is a daily cycle. So the daily cycle and the weekly cycles were down, and that's why we have such a big down move. Now here, that's right now in the end of May, the daily cycle is bottoming, and we should have a bounce into, I think it's the 16th of June. And after the 16th of June, we have the same situation as in this stop, because then the daily cycle here goes down and the weekly is still down. So we're looking for a big sell-off starting later in June. Now, what to do in this situation? So as I mentioned before, the people who like to trade and the people who like to trade to make money, that's valid. You know, you can do whatever you enjoy. But if you want to make money, the easiest thing is here to stand aside, because the money we made here on the downside, you're going to give back here, because I expect to see a wide trading range based on the fact that the daily cycle is up and the weekly cycle is down. So to stand aside for a couple of weeks and wait for this point where the daily cycle is turning down again, together with the weekly cycle going down, that's the big money market situation that we expect to see soon and take advantage of it. So now we want to take a look at what we did this year, because we had no stocks and we had been writing that the only thing we want to be in are the commodity stocks. So we take a look at what we did at the USO, because we made a track record that we can send out later. So everybody has time to look at it. And it gives every trade where the entry point is, where the exit point was, which day the entry was, which day the exit was. And it gives every trade with a total profit of 37%, 37.11%, like until the middle of May. So we stayed in the stocks that we thought would do well, which is the commodity stocks, and we stayed out of the other stocks. Another stock that we really played was UNG, because we like the the natural gas price. And here in UNG, it also gives, for people who want to check this, the entry day, the entry level, and the exit level. And the profit here was 34.5%. So while the market were crashing, we were doing very nicely, making an average of 35% on the stocks that we're playing. Now, the best result, except being short the S&P, was our Bitcoin forecast. And here we have the Bitcoin. So it's the same situation. It starts the beginning of the year, and it gives again every signal up, down, up, down, up, down. It says the total profit is 114%, total signals with 12%. So there's not so much trading going on. 10 closed in a profit, and usually when we have a loss, we have very small losses. So 2 were in a loss. So I wanted to make this podcast. I wanted to make it clear that trading doesn't have to be continuous all the time. We know when cycles bottom, we know when there's a clear signal, and it's more profitable to wait till cycles line up and there's a good buy or sell signal instead of being in the market the whole time and giving back the money that we make based on longer term cycles. I hope that this has been helpful, and we'll continue to look at other cycles in the next update.